welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Dr. Merav Ozair, global leading emerging technologies expert, and Michael Durette, Chief of Revenue Officer of CRC Oyster. We're here to discuss crypto compliance, oversight, surveillance, and risks that financial institutions must keep in mind as they expand their digital asset offerings. It's great to have the both of you with us. Welcome to Trade Talks. And Michael, that really is the key right now, where they have to really think about expanding into digital asset offerings, whether you're thinking about stable coins, tokenized deposits, and so forth. It's just the way the digital economy is shifting.
That's right, and I think for financial institutions, just a broad marketplace, it's understanding what the use case is, right? So each institution, if you're JP Morgan, it's going to look very different than a regional community bank, credit union. But I think where the technology is today and where it's going in the future, banks, financial institutions, and just the overall financial services industry is trying to figure out what do we do, how do we do it, how do we offer that, and kind of what do we focus on, right? And prioritizing. You know, again, from a risk standpoint, right? I mean, at least with financial institutions, you know, I'm old enough to remember Chuck Prince talking about standing up and, you know, as long as the music's playing, you have to stand up and dance. And we go back a couple years ago and we saw what happened with Silvergate and with Signature Bank. And now institutions are really kind of jumping into this space, but they really need to slow down, look at it from a crawl, walk, and run standpoint and figure out how do we help our customers, our depositors, our members, and then what do we do and how do we offer it in a compliant manner where compliance is right now a relatively gray area.
Yeah, and Merav, we understand the efficiency that blockchain technology creates, whether it's financial services or other industries. Now we need to be able to extract the value from that, right? And you can leverage these technologies to enable successful compliance, to streamline reporting as an example, and really understand what the value of all this is.
I mean, I believe, being in the blockchain, space, for a long time, I believe that tokenization and moving everything to the blockchain is going to increase compliance, not decrease compliance. And this is something that still people don't understand exactly. The uses, how we can use blockchain in order to increase transparency, immutability, the compliance through smart contracts, the attestation. All of this, KYC, AML, and all of that, you can do that. It is possible, and because it's transparent, because you can't erase anything, and nothing goes away. From the reporting perspective, consumer investors protection, and all of that, I think that it's better. But the problem, at the moment, is that most people don't really understand the value of blockchain in what I just mentioned. In terms of what the technology can do, because the discussion was always about Bitcoin or not Bitcoin, volatility and all of that. No one really talked about blockchain as a technology.
Right.
And I think this is missing, and I hope that that's the discussion that's going to come.
But these are discussions that we're having right now, and institutions understand this: investor protection, data integrity, which is really key, governance, the security on the chain, and so forth. These are concepts that any traditional financial company can understand.
Yeah, definitely understand, but the difference I think today is in the current environment outside of data, right? They're able to mine that data, they're able to look at it and see if it's AML, or if it's know your customer and KYC. The partnership now, and this is something we were talking about earlier, right, is having third-party providers being able to utilize that technology. But that becomes an inherent risk then for an institution, right? So it really is something around kind of understanding what the strengths and weaknesses are of the organization, and then being able to partner with the advanced technologies that are out there to be able to look at the blockchain, to be able to monitor it. And it's come so far in the last several years, and looking forward now, the next couple of years is really interesting in this space. You're seeing a ton of investment, you're seeing a ton of opportunity in the partnerships that are out there. But that's really kind of where it is the old laws which govern the last 75 years or the last 20 years are very different than the laws that are going to be governing over the next several years.
I'm not sure exactly. I think that compliance, we all know what compliance looks like. Oversight, we know how it looks like. Surveillance, we know how it looks like. The tools are going to be different. That's for sure. The engagement will be different. The type of investor trading will be different. The platform is going to be faster. So that's something that it's coming. You can see that more and more tools are getting built, and more will happen. I mean, there was kind of there wasn't a necessity to build them before, but now it seems that this is a time to start building.
Right. I mean, if we are a digital economy, that's certainly the way that we're evolving to. I mean, we're watching the global capital markets evolve as we sit here. If we are in a regulatory environment that's set up for the paper economy, there's a lot of catch up to do, right? And this is why evolving that framework is critical to continue to advance these priorities. And I also think, to the point that you made earlier, the ethos of us versus them has certainly shifted. The integration is striking,
That's
right?
Yeah, and you look at over even the last couple of months, right? The movement, and again, kind of post-Trump presidential kind of victory, you saw kind of the administration starting to kind of lay the groundwork, right? We talked about this earlier. In the U.S. is basically a third adopter right now on the digital side, right? And understanding money, understanding where the opportunity is, and this administration wants the U.S. to be a market leader in that. So the market structure is important, right? The compliance and the risk aspect of it is important, but you have other areas that are several years ahead where the U.S. is catching up to that, right? But again, we were talking about this, Jill, earlier, right? I mean, this is the U.S. is where the largest, the most liquid capital markets, right? Where you have the deepest, one of the most strongest banking systems. And so when you look at kind of where we're going, that catch up is going to come, and you're going to see that be able to, for the U.S. to start to kind of take leadership. For the last several years, it's been the opposite, right? Which was when, if it's, certain administrations, the oversight basically saying, we don't really want to be a part of this, and we're going to regulate by enforcement, and there are no clear rules, so therefore, you can't operate in that space. The rest of the world said, we're going to go ahead and do that, right? And filled that vacuum, and now we're a little bit behind, but, again, I would put, I would bet that the U.S. gets pretty close and starts to become a leader very quickly.
Yeah, I think that especially with the Genius Act, that it opened the gate. Everyone now wants to, issue a stable coin, but I think what's lacking yet with the stable coins, all what I hear is that most of them are saying, oh, we're going to have our stable coin, whether it's PayPal and Goldman Sachs, everyone going to have, but I haven't really heard what is the use case. Okay, you want stable coin for what? How it's going to work, the interoperability. If I'm using PayPal, can I use it also on this platform, on Ethereum? Where can I use it? How it's going to interact? Because the people forget that in order for you to convert fiat to stablecoins, you pay fees.
Right, but I think the industry's had significant advancements in terms of interoperability.
Yeah,
but it's a reality now.
But the interoperability is not yet. It's not there yet. I think we still.
I mean, it's not ubiquitous. I would say it like that. But it's. I think that's one of the biggest priorities in the industry.
Right.
Is not only security on chain, but interoperability, or else this whole thing doesn't work.
Exactly.
And data credibility and auditability and governance. I would say security, interoperability, and data. Those are the three biggest issues from a technical standpoint.
Yeah. And interoperability, they are working that and have been working, but not. I haven't seen a solution that's really going to integrate everything yet.
Yeah.
I mean, that's something that they will have to work on, because this is part of the security, the risk management.
That's right.
I mean, if we don't have interoperability, that leaves a lot of gray areas for things to happen. So we need that for sure, with the data and the cybersecurity and everything else. But interoperability, I think that it's not just about efficiency of the trading, but it's also from a security and risk management perspective.
Yeah,
that's.
But I mean, you could also argue that you're making strides in the payment space for sure.
Yeah,
absolutely.
With this, I mean, at some point, it's almost going to be like direct deposit one day. Ubiquitous. We don't even think about it. I don't even think you can get paper checks anymore. For where you get paid, as an example. I mean, why would you want to? But I think again, the advancement and the evolution of the regulatory landscape, that's what's going to be key for it.
Yes.
You have to be able to understand what the operating environment looks like
Yes.
and how that applies to also operating as a global company.
Yeah, I mean, if you think about stablecoins and why there's so much focus on stablecoins today, it's because of the Genius Act from a couple months ago.
Exactly.
Right? And that's one of the first areas to address it. Right? So again, without regulatory clarity, institutions, anyone that operates in the U.S. has to be very careful, right? And there's that gray area where rules and regs are black and white, right? And I think, again, the Bank Policy Institute came out earlier this week, and they warned about, the possible issues with stablecoin yield, right? And some number, I think it was like 6.6 trillion, right? That they were worried about deposit flows. We're a fractional reserve banking system, right? So even a tenth of that, when you use leverage, becomes a significant worry, right? So I think they're asking the right questions, they're starting to focus on the right areas, but again, a lot of that, Jill, to your point, on stable coins, again, is because of what just happened with the Genius Act, right? And now it's looking more forward to, okay, what is next to come? Where are we going to be? How can we utilize the blockchain, the digital space within the US ecosystem? And there are primary, tertiary, secondary benefits that we're still all figuring out right now. And those are the questions that clients ask, right? Those are the questions that the marketplace is asking is, what do we do? How do we offer it? How do we do it in a compliant manner, right? Because enforcement by regulation sets a very negative tone, and it really dampens, I think, the ability for institutions to be able to look at technology, adopt to it, and really kind of work with it.
And also, it's create like misconceptions with the public. I mean, if you hear, that there was, SEC suing, this company and that company. I mean, it gives, the impression that, oh, these are all criminals, suing everyone. And that's...
Well, I think there's a couple things here. It's not specific to digital assets. We were talking about this off camera.
Yeah.
We're not going to legislate away bad actors. There could be something new that we're talking about.
But there were lawsuits, not because they were bad actors. I mean, things that they were on the gray area. That, I mean, you weren't clear about. The SEC thinks this way, they think that way. It wasn't really like,
as it stands
like
then, but I think to Michael's point, having that clarity around Genius Act was huge.
Right.
And then if you could get the Clarity Act passed, you understand, who examines the reserves, the liquidity, with stablecoins, tokenized assets, where is it being held, how is it being held? Again, that's just going to, I think that, in my mind, I think that's what accelerates us even more versus a new product or a new ETF or a new fund coming out.
And I think that this is what, the public perceptions about the digital asset space will change now because, there's more clarity, institutions know what to do with that, they're offering it more, they're opening the gates. Even JP Morgan, they say, oh, we're not going to let you, buy Bitcoin now. Okay, you can do that, through your account with Coinbase. So
now they're letting lending for Bitcoin and ETH, right? Again, and Jamie Dimon, you're probably one of the best bankers since JP Morgan himself, had comments several years ago, but behind the scenes, if it was Onyx or all the things that JP Morgan was working on, they see that, right? And they're the world leader in the financial institution space and banking, right? So it's very interesting that all of a sudden, or a slow, steady wave over the last 24 months, where probably by the end of this year, they're going to allow Bitcoin and ETH to be used, to be able to borrow against.
Yeah, but I also see, Fidelity. There was a long time that they didn't allow you to buy and sell, but now, they adding more and more, coins. There was only Bitcoin, now it's Ethereum, now it's Litecoin, Solana. It's just, and little by little, they're getting more clarity and they know that there is a different environment now, so they starting, to move into that. And it's also important that, whether JP Morgan or Fidelity or all these institutions will have some customer education in that space. This is important.
Yeah, but I also think certainly the motivation is client demand, right? If there's demand, whether you're talking about other forms of alternative assets and so forth, but we have to remember at the end of the day, JP Morgan, Goldman Sachs, Fidelity, and so forth, these are regulated institutions. They have to act in fiduciary capacity. So until they're, they might have been working on the technology behind the scenes, but the responsibilities are different than a smaller company that just evolved out of the digital asset space. So you can understand why. So as we look ahead here in the last few minutes, Michael, what do you think priorities will be for financial institutions? What do they need to see as we move forward?
It's a really good question. To your point, right? I mean, it's demand, right? It's also how do we serve our customers, our depositors, right? And I think that's at the heart of it, which is when JP Morgan offers Coinbase, understood, right? But for regional community banks in the Midwest or on the coast, what is the use case and how do we offer and what do we offer to our customers, right? So I think that's, and we're having these conversations with those institutions, which is, what is your use case? What are you trying to accomplish with it? We just want to be in the space, of course. But how are you going to, what are you going to offer? What are the partnerships that you're looking at? Because again, it's going to depend on the institution, but Jill, I think you said it best, it's demand, right? And this has become from a 2009 white paper into the crypto winter of 22 to now the Genius Act in 25, right? That's all kind of progressing forward.
What would be an example of how you envision them leveraging this technology? Would payments be the first place?
100%.
Yeah. I mean, we saw that Square just, I think they now allowing to use Bitcoin. I mean, since yesterday, I think. Yeah.
Yeah, but when you think about it from a regional banking perspective, or branches where there's just a handful of them within a community, I would imagine payments would be the logical. Yeah.
And I think that's where you're probably seeing some of the most innovation, some of the most kind of opportunity, and some of the biggest growth area, right? Which is in the payment and the rails, and then a stable coin, right? Because it's how do you, again, move it on and off, right? Without having, again, a currency that moves 5 to 10% in a day is not necessarily a currency, right? And that's where that stable coin offers that buffer, which allows for investment or allows for kind of the opportunity to buy and then to bring it back in and then to bring it back into the U.S. ecosystem.
Yeah, I mean, that's what stablecoins are perfect for. If you want to think about a couple billion people who are already using the technology that want to get access, whether it's you're looking for securities or tokenization within the U.S. economy, that's a great use case for it.
Yeah, I mean, it's kind of like simplifies the cross-border investments. If I'm coming from a different jurisdiction, I mean, I want to invest in another of those jurisdictions. The stable coins, because they're moving on the blockchain, it simplifies things. I mean, and with that, I think it opens up more liquidity. The market is going to be more liquid if you think about it, and prices. I mean, everything is going to be more efficient. Not just cost efficient, but efficient in terms of, reporting, auditing, and everything else, and also in terms of the product that will be offered, because if they're gonna have more, let's say, investments, streaming into the U.S. Okay, so now maybe you can offer more products. So that it's a liquidity that also. Stimulates the other things to
well, that's what we're talking. Yeah, in the last minute here, Michael, I want to give that to you. We were talking about it again off camera. Liquidity begets liquidity, right? And if you're going to be settling and all takes place with this underlying technology, it's almost a self-fulfilling prophecy for the industry to move that way.
They have to, right? And that's where things are going, right? And I think that's the biggest thing that we understand, right? And the fascinating part is, look at how much technology has gone in the last 5 years, advanced, look at the next 5 years and where it will be, right? And so understanding what Bitcoin and the white paper was about is very different from what the technology is today and where it's going, but it's catching up to the 21st century.
All right, I appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.